Thank you so much for joining us, Ben Coverston.
Thank you for having me. Thank you for having me.
Temporal, who was, in my view, one of the most crack teams. You guys are doing incredible work at the moment. You're absolutely everywhere. HumidiFi is doing 48% of total weekly DEX volume, which is huge. Harmonic is backing blocks tighter than ever before and getting more average rewards than a lot of the other block builds we're seeing. I want to get straight into it and start with Harmonic. Where did that come from? What was the motivation to build updated, more optimized block building software? What were we lacking, and how are you getting us there?
Yeah, look, so Solana is where it is today because its teams compete, right? Aggregators compete, borrow lens compete, right? The prop AMMs compete, right? Where is competition missing? It's missing at the infrastructure layer. It's missing at the block building layer, right? As I just said in my talk, centralized markets, they don't die loudly, right? They die quietly, right? With small skews, right? With hidden advantages, right? And just with behavior no one can see, right? So at Harmonic, we could have just built a better monopoly, but we didn't want to do that. We rebuilt the market, right? To us, it is inevitable that you're always going to have these full monopolistic kind of block builders, trying to take over the network. You have all this custom block building solutions, right? And validators, they have a lot of demand for revenue, right? And applications have a lot of demand for inclusion, right? So in our eyes, it's inevitable that you're going to have a lot of block building solutions that come to market, right? And the job of Harmonic, right, is to, again, rather than having a single monopoly or a single builder, to create a market, right? So now everything's out in the open. It's transparent. We're returning the control back to the validator. We're returning the control back to the applications, right? The job is to give applications and validators maximum optionality, right? Like if things are opaque and they're locked into a single provider or like a single scheduler, like we failed, right? Validators need that optionality, right? And so do apps, right? As an app, as HumidiFi, right? I want block builders that pack like millions of TPS, right? That pack my blocks really, really fast, right? And really, really tight. And creating competition between block builders naturally incentivizes them to do this, right? Because let's say I send 200 Oracle updates or like 2,000 even. One block builder is sophisticated enough to include all 2,000 of them, right? And then maybe like the other one only includes 200, right? If you look at Harmonic blocks on mainnet today, we're including more Oracle updates than any competition out there, right? And the reason we can do that is, again, we have multiple concurrent block builders that are all running in parallel, and the best block is chosen every single time. We're the only system on mainnet today that can do that. And I don't know if you guys just saw the talk, but one of the demos that we had up there on stage was on mainnet. We sent out a block with 13,000 HumidiFi Oracle updates, right? This is kind of a demo to like demonstrate the power of the system, right? We want institutional grade liquidity. We want tight spreads. In order to do that, market makers need to get as much information on chain as fast as possible for as many assets as possible. Every asset across every asset class, right? And so for context, right, the average block on mainnet today maybe has like 200 user transactions. And we're just like, let's just do 13,000 Oracle updates, right? And we're just getting started, right? Like by the end of 2026, if we're not doing demo blocks that are like over 100,000 Oracle updates, like we failed. We absolutely failed. So we're really, really excited to drive internet capital markets forward on Solana, and through building HumidiFi, which I'm sure we'll talk about in a bit, right?
In depth, yeah.
We're going to use a lot of this knowledge that we've learned building the #1 application on Solana by invocations and by volume, and we're going to take this knowledge to build infrastructure for internet capital markets. We know exactly what is missing. We know exactly what we already have. We know from experience.
Perfect. We are going to dive right into HumidiFi and get really wet with that in a second. But I first want to start, you and KV are almost in a race to bring down the transaction and the CUs as low as possible. Yep. What is the edge there that you guys have that you're able to do this at scale?
Sorry, can you repeat the question?
So you and KV are always in a race to kind of get those CUs down as much as possible.
Yep.
How do you get there? Is it just full-time shipping and working late at night to kind of get that across the line?
Well, look, first of all, I'll say our team are shippers, right? I couldn't be more proud of everything that we've shipped in the last year. We're fully in office all in New York. Team is always on the grind. They work extremely hard. That's just part of it, right? Like the raw natural talent of the people that we have on our team is unmatched, right? So proud of them. You know, KV is a phenomenal engineer, one of the best in the world, right? That's where the bar is at Temporal, right? We only hire the best of the absolute best, right? And we only build the best, right? So back to your Oracle update question, right? I mean, like to us, it's like we're like pretty pragmatic about it, right? It's like we say, okay, you know, one store takes this many compute units, one load takes this many compute units, right? What do I have to do within this Oracle update? You know, how do I write the cheapest assembly to do this, right? And we do compete on these compute units because, you know, every scheduler out there basically prioritizes on tip normalized by CU, right? So which means the lower CU that you have in your Oracle update, the more priority you get over the competitors, and that just has to be balanced with the complexity of the Oracle update. So right now, HumidiFi is at 47 CUs. It's one of the cheapest programs on mainnet today by CUs, right? That's really, really good because we don't take up that much block space. It's hyper efficient. This allows us to quote many, many more assets, again, across many more asset classes. So yeah, I mean, competition is fierce, but I mean, look, at the end of the day, we're pretty pragmatic about it. You know, the folks on my team have the knowledge to be able to write Oracle update fully in raw SBPF assembly. and look, I mean, this niche knowledge is surprisingly useful as a.
So we touched on it as niche knowledge. If we focus it down to the average DeFi user who opens up their wallet and goes to a router trade through Jupyter, what does all of this look like? If you condense down, you know, hyper efficiency use, what does that get for the average user?
Yeah, well, so it means they get more throughput, right? It means they get higher TPS, right? And like naturally, like the HumidiFi transactions are going to be a lot more prioritized, right? So like the user will go to the router will give them a quote, HumidiFi will have the best price. They submit the transaction that swaps on HumidiFi into the network, you know, give it like some time, probably less than a second, right? That transaction will propagate all the way through the network. It'll come back to the user as a confirmation, and boom, swap complete, just like that. You know, this is why I love Solana. I'll never forget the first time I did this, right? You know, I came from the HFT world. You know, we weren't thinking in, you know, milliseconds, microseconds. We weren't even thinking in nanoseconds. You know, they think in picoseconds and like femtoseconds, right? You know, maybe you guys never heard these terms, but like, you know, this is the kind of timescales that we operate on, and like these are the kind of things that, you know, we're used to dealing with when we optimize our systems, right? So. Like again, when I first tried Solana for like the first time, like I saw how fast it was, and I'm like, what the hell? This is insane, right? You know, like we're like
at least relative to everything else that was out there.
I mean,
and
look,
what
it was like
to...
ETH BTC. I had to wait minutes for my transaction to confirm it. It was super expensive. Like when ETH gas fees were just crazy in 2012, I'm like, this is insane. Like you can't even send a transaction without being a billionaire, right? Like, what do we do? So that's why I was so blown away when I tried Solana. Like I just sent the transaction. It was on an on-chain club, you know, this thing called Serum, rest in peace, right?
The good old days.
The
good old days.
It just came back like instantly. I'm like, what? Finance on chain is it's actually possible, right? So I mean, I've been hooked ever since.
And then you thought, I'm gonna do this better, faster, more engaging. I'm gonna have even better marketing.
Look, like it might be fast, but at the end of the day, we have a lot of work to do, right? You know, only just now, starting this year, are spreads tighter on Sol USDC. There's so many more assets. How many assets do you think are in the world? Thousands, tens of thousands, hundreds of thousands? I don't know, right? But until they're all on chain, our mission is not done, right? We're just getting started.
So yeah, this vision of Solana as internet capital markets for me was really exemplified on the day of the Monad launch. So we saw, you know, a non-native token brought on Solana through Sunrise, and then obviously HumidiFi ripped it up, and you guys did a huge amount of volume. Is that for you kind of the vision of internet capital markets? Like, are we going towards a world where we just have prop AMMs and simple swaps to aggregators over, you know, more traditional legacy comps, things like that? Yeah,
I mean, look, every asset class, right? You know, stay tuned for future launches. You know, I think we definitely want to have these day one listings on every asset possible. You know, it was cheaper to trade Monad on Solana than it was on Monad itself, than it was on Coinbase. We were the best, cheapest place to trade Solana, and that's pretty cool. We want to do that for every single asset. Like just the fact that, you know, retail is getting better prices on chain now, user welfare has increased. That's pretty cool. That's something worth fighting for. I don't swap on centralized exchanges anymore. I don't. Every single, like, I can't remember the last time I swapped on a centralized exchange, right? Because prices on chain are just that much better, and there's more assets too. It's permissionless, right? Gone are the days of these oppressive listing fees, right? And it's just like, I mean, look, like, I don't want to give 1% of my token or 2% or 5% even to centralized exchanges. Some tokens, they even give out like 10% plus of their supplies, right? Like it's kind
And
of crazy.
how regularly does that end up being, in hindsight, a great decision?
Look, I think at the end of the day, it probably can make sense for like a lot of apps, right? Because I think the question that like a lot of apps will ask when they're like launching tokens and stuff is like, can the users of this exchange bring me more value than the token I'm giving away, right? And at the end of the day, I do think the answer to that question often is yes, right? Like I think it does, right now often makes sense to give away token to centralized exchanges, but also at the end of the day, we're big believers that competition is good, and the more competition we create between exchanges, right, like especially decentralized exchanges, to now challenge centralized exchanges, we're again going to have a much lower barrier to entry for like listing and for apps to really get their product out there and to get exposure into the hands of willing investors all over the world.
That's fascinating, and I don't mean to derail the conversation because I know you want to dive deeper into everything that's happening in the back end, but you talk about the trade-off there, and sometimes it's a good trade-off. It's beneficial to pay that listing fee, offer up 5, even 10% of your tokens to a centralized exchange. We've been asking a lot of our guests this week to what extent this sort of marriage of TradFi and DeFi, the number of trillion-dollar institutions here at Breakpoint, is something that costs us the core tenets of crypto, of decentralization, of disintermediation, of democratizing access to finance. You talk about, competition is good. Fully agree with you. So where do you stand on that debate of, yes, we want institutions to be here to use the chain. We want, TradFi giants, trillion-dollar asset managers to be here to use the chain, put assets on chain. But at the same time, we're sort of losing some of our core identity. Where do you stand on that spectrum, let's call it?
Look, I mean, I don't even think we're losing our core identity, right? I think, blockchain technology and decentralized systems are by nature meant for everyone, right? They don't, like, public ledgers and public blockchains, they don't discriminate. They don't care if you're an institution. They don't care if you're a random retail degen in Bali, right? They don't care if you're in a third world country where maybe you don't even have access to a bank account, right? The fact that all you need is some basic cryptography and you can spin up a wallet and you can store your funds securely in any country, anywhere in the world, right? Where you might not even have access to good or reliable banking infrastructure is phenomenal, right? Like, we have something to offer for everyone, right? And it's okay that we offer different things to different people, right? Like, again, we're trying to maximize user welfare. We're trying to make things as trustless and as transparent and as cheap for users of all kinds, institutional and, retail alike, right? So look, overall, I think we have a lot to, offer institutions, right? I think tighter spreads are one of those things. I think permissionless borrow lend is another one of these things, right? I think perpetuals are another one of these things, right? Institutions, there's extremely high demand for all these things, and if we can give them a better product than they have in the centralized world, we benefit, they benefit, everyone wins. I don't see a problem with that, right? We're still a decentralized, permissionless blockchain. I don't think that replaces our identity at all. I think in many ways that validates it.
Excellent, thank you.
Yeah. So we talk a lot about tighter spreads, lower costs, higher throughput. We've got updates like Alpenglow coming, we talk a lot about MCP. How does that fit into this vision of on-chain finance?
Yeah, look, so first of all, let's talk about Alpenglow, right? Alpenglow is a new consensus mechanism that's been designed by some of the smartest people in the world, all at, Anza and FireDancer, right? It is, in my view, like state of the art, right? It's extremely fast finality, much faster finality than we have right now. And I mean, look, it fits into our overall vision of, reducing latency, right? Now, instead of waiting, some crazy number of slots for finality, I mean, it's not that long right now. I think right now we define finality is around like 32 slots is when you're considered finalized. Alpenglow is going to be like way shorter than that, right? Over an order of magnitude faster. Right. So look, I think lower latency for finality and confirmations is really good. This is going to speed up user flow on exchanges. This is going to improve security of the network, right? And we're also going to standardize a lot of things that, maybe weren't standardized in the past, right? Overall, like Alpenglow is formally verifiable. It's provable, right? POH is great and all, but I think it's time for the second generation of consensus mechanisms, to join us in Solana land.
And so HumidiFi is obviously a huge part of that. I want to dive in and focus on HumidiFi for a second. You've been able to completely dominate DEX volume with just 7 million in inventory. So you've just done the ICO. I'm wet personally, very excited. You've got another 5 million inventory.
It's water world.
It's water world. What does that extra 5 million in inventory mean for HumidiFi moving forward? Because already your volume to TVL ratio is like 170 or something. It's
So
huge
look,
stat.
like we're at the point where your average retail user can get the best fill on Sol USDC. But what if you want to swap an 8-figure or a 9-figure clip? We don't have the inventory on chain to do that right now. SolFi, not even Wintermute. Like combined, maybe you could get away with swapping low 8 figures of just one asset, right? We want to enable high 8-fig swaps of like any asset, right? And like we also want to enable, you know, more kind of institutional products on chain as well, right? You know, like what if you're a big institution and you want to be able to enter or exit a giant, you know, 9-figure or even 10-figure position, right? Like the place to do this right now is still TradFi, it's still centralized exchange, it's still OTC, right? But truthfully, I think DeFi is going to become pretty competitive for doing this kind of stuff in the near future. But yeah, look, we do need deeper liquidity, we do need more inventory, right? And as deeper liquidity, you know, arrives to Solana, and as you know, all the prop AMMs add more and more inventory, the bigger swaps are going to come, right? You know, like we've seen some really tight, you know, high 7-fig, maybe a couple low 8-fig swaps on Solana this year, right? Which is pretty cool. But like I think we can do even better than that. I think we can, you know, not only enable larger swaps, but we can also enable tighter spreads on the smaller swaps, just by virtue of having more liquidity and more inventory.
Okay, so if you you know, the proprietary party of that inventory, I've seen a lot of people on Twitter asking about, can I deposit to HumidiFi and let them run these markets for me, and I can help to grow that liquidity while still kind of earning a share of fees or tightness on spreads. Is that a vision of HumidiFi in the future, or do you still want to keep that totally in-house?
Yeah, so I mean, yeah, it's totally in-house right now, right? That's probably how it will stay in the future, right? I think we're experimenters, you know, we're open to trying different things out, you know, maybe in the future we can, you know, experiment, make some other kind of pool where users are allowed to deposit, but like, you know, these are all kind of like ideas at this point. But like I will say our main priority at the end of the day is, again, every asset across every asset class, tighter spreads possible, or tightest spreads as possible. And look, I mean, if at some point that means crowdsourcing liquidity, you know, maybe we can do that, but you know, would need to research all the legal implications of doing this, and it's like, again, then we'd be giving away, you know, some profits when margins are already razor thin. So I mean, there's probably a lot of variables that go into that, but you know, I'd say we're open-minded.
One of the big questions that people have on that is profits, and it's very easy to see on a passive AMM. You know, there's a fee that goes to liquidity providers, and it's very clear. There's a lot of questions around how HumidiFi generates its revenue. So are you able to just illuminate that? And
Yeah. So market makers capture the bid-ask spread, right? So, you know, like let's say that we're quoting like a 2-bip spread, right? That means that's 1 bip of edge on buys, 1 bip of edge on sells, right? So if, you know, someone buys $1,000 of Solana and someone else sells $1,000 of Solana, I pocket that spread, I pocket that difference, right? And it seems small at first, like, oh, you know, what's 1 bip of 1,000, right? It's like, oh, like 10 cents, right? But when you have, you know, millions and millions of these trades every single day, it adds up pretty quickly. So HumidiFi is profitable. We do capture the bid-ask spread. We do make some money. It's, you know, but I think we have a long way to go, right? I think we want to bring way more volume onto Solana than we have now, and the best way to do that is to continue offering the tightest spreads, not just across Sol, but you know, across, again, every asset.
What's the biggest challenge in optimizing for those metrics, and you know, having the sort of North Stars that you have? There's got to be something that you know, keeps you up at night, that makes you think, you know what, these variables could change, and then my calculus has to change. And how do you think about that?
Yeah, look, I mean, there's definitely a lot of challenges, right? You know, one is there's other sophisticated traders on chain that are trying to snipe us 24/7. They're trying to pick us off, right? You know, they're trying to.
You can name names. You can name names if you want. James Wynn might be listening.
No need to name any names, but you can see them on chain. Blockchains are public ledgers after all, right? So like these guys are trying to snipe us 24/7, right? Which means we have to be extremely fast. Again, this goes back to, you know, this nanosecond level type optimization that we do. We also have to have extremely good pricing. HumidiFi is predictive, right? Like it has predictive institutional grade models for prices across many assets, such as Solana, and the combination of being incredibly fast and having incredibly good pricing models allows us to quote the tightest spreads on all of Solana, right? And allows us to do more volume than any other of the prop AMMs can do, right? And so look, there's a lot of very smart adversaries out there. That's one thing that's pretty difficult sometimes, but also, I think another thing is, we need to improve throughput of the chain, right? There's just a lot of rate limits right now, right? We've got the stake-weighted QS and Agave, like we've got like the Cheeto rate limits, like these are all bad. Like rate limits are bad, right? Like why do you think I just did a demo on the main stage of 13,000 Oracle updates in a single block? This is what we want. I can't do that at the average block right now. The more Oracle updates I can land and the faster that I can land them, the tighter spreads I can provide, and the more assets I can quote on, right? It's like the rate limits need to go away. We need to get rid of all rate limits. We need to maximize throughput of the chain. I won't spoil anything, but I think FireDancer just finished their talk, and you guys should check that out. FireDancer is putting an insane amount of work into also improving throughput and reliability of the chain, and maybe very soon we won't be the only ones putting out these 13,000 Oracle update blocks. I know FireDancer and really talented team has put a lot of work into this, and even Agave too. I think they want to get rid of that stake-weighted QS. I know Alessandro and all the performance engineers at Agave have been putting a lot of work into this.
So I want to ask you about that actually. You mentioned a few sort of infra-level developments, innovations, really crack devs working on serious problems. Which one of those do you think is going to be the biggest unlock for you guys in the next, let's say, 6 to 12 months?
The biggest unlock for us? Yeah, look, I think in aggregate, again, it's maximizing competition, maximizing throughput, minimizing latency, right? So all of the Agave performance improvements, I think they're calling Ferrari, combined with FireDancer, right? Combined with Harmonic, right? This is going to create, huge marketplace, competitive block builders, right? FireDancer and Agave are massively improving all of the networking infrastructure, all of the TPU infrastructure, the entire chain, right? Basically front to back, right? So look, sounds like a basic answer, but at the end of the day, we just want to land more Oracle updates.
Hard to pick a favorite, is that what you're saying? There's so much happening that it's difficult to pick a single one.
Yeah, look, I'm really excited about FireDancer for sure, and all of the infrastructure and technology that they're going to bring to the chain. But yeah, look, I definitely would not count out Anza and Agave either. They're doing a lot of performance improvements of their own, right? And Harmonic is going to bridge all of this together and create a really big marketplace, for all these different block builders and all these different systems and technology, right? So look, I think IBRL is the one thing that we're really excited about.
IBRL, perfect. I look very often at reports.finance.io, and I very regularly see Harmonic at the top of that average reward.
Yep.
Is that the biggest motivator that's going to attract stake to running Harmonic and helping you really continue to grow that?
Yeah, look, so rewards are obviously something that the validators care about a lot, right? And as I mentioned previously, right, Harmonic, if you just look at the blocks on chain, we're including more transactions and more Oracle updates than everyone else, right? And by including more transactions and more Oracle updates, we get high rewards, right? So it's good for validators, obviously, they make more money, but it's also really good for allocations, right? Because we're removing throughput bottlenecks and we're getting rid of these rate limits, right? And yeah, we're overall increasing throughput and performance of the chain.
Excellent. So I want to talk about WET for a minute, because that's one of the biggest stories of the last 2 weeks. We've covered it extensively.
Everybody wants to hear about this.
Everyone wants to hear about this.
Water world.
Yes.
Yeah, so when you announced the tokenomics, there was a lot of pushback and there was a lot of frustration. We brought to light a lot of what some people were saying. Here we are, a few days after launch. Price is looking good. Has that kind of deflected a lot of that criticism back, would you say?
Yeah, look, I think, any token anywhere, there's always going to be criticism, but I don't care, right? Look, if all you do is focus on the criticism, you're doomed to fail, right? We're focused on, again, quoting every asset across every asset class. And if buyers and investors believe in that vision, they can buy. And if not, they can sell, right? But nothing is going to stop us from bringing every asset to Solana and quoting as tight as possible. And, I think for the buyers and investors that believe in that, right? WET is out there in the market, right?
Yeah, and we've seen a trend, hyperliquid pump. These projects have all gone for 100% buybacks. The market has kind of decided that buybacks are what people want, and yet you guys are eschewing that for fee rebates. What's the motivation, and are buybacks overrated, actually? Are we over-indexing on the importance of buybacks?
Yeah, it's a good question, right? If you look at like a lot of the top exchanges and like a lot of the top exchanges today, right? I mean, I think like again, one of the top demand is just getting institutional grade liquidity, right? And so like if we allow the top institutions that are interested in getting the absolute best fills, right, to accumulate token, right, and then as a result they get a tighter spread, right, that generates some degree of loyalty, right? It also means that they believe in us as a project, right? And then they're also rewarded for that loyalty and that support in the form of tighter spreads and even better liquidity than the default HumidiFi user gets, right? I mean, look, you have spreads that are already the best. Accumulate enough token, and you'll get spreads that are even better, right? Like I don't know, like I think that's a much better value proposition than like buybacks, right? I mean, like at the end of the day, right? Like the profits, go back into HumidiFi, back into the team, right? Back into improving our tech, back into improving our infrastructure, right? Like we've talked about buybacks before, right? I don't know, right? Like I think right now we're really bullish on just giving people tighter spreads, right? Especially people that believe in the project long term. But like again, we're always open-minded. We'll see what happens.
I think a good way to synthesize it is to say that it's an HFT token for HFT traders almost, because that really dives deeper into that.
Yeah, look, like if you believe in HumidiFi as a project, right, and you want to lock in that loyalty to HumidiFi and get the tightest spreads possible, right, you can do that.
Yeah. I want to switch a bit. We have talked a lot about inflation. That's been one of the big topics. I know that you're very deeply involved in the validator community. What is your take on 441? Is it an oversimplification? Are reduced emissions going to make Sol drive up? What's the
really curious where you stand on this one.
Is the latest proposal to reduce inflation, right? Okay, so if I remember correctly, that was Helios's proposal, right?
I do believe so. Yeah.
And they're basically trying to accelerate the inflation schedule. Look, I think inflation is always a fine balance, right? Like I think high inflation, right, in many ways attracts institution, right? Like if you talk to a lot of institutions, right, yield is the word.
That's the driver.
They care about yield. If you can give them yield, they're interested. And like at the end of the day, right, like the question is, right, like what is the right balance of yield to balance bringing in institutional interests, right, and then to like balance that with overall narrative, token price, right, to balance that with keeping value in the system, right? Because a lot of people argue inflation's like a leaky bucket, so these same institutions are taking fees and taking commission of the inflation, it's bad for price and whatnot, right? And look, I think it's a fine balance, right? I don't think all these institutions are evil and they're just trying to like extract money and bury the token price. No, I think they're bringing a ton of money and a ton of business on to Solana, right? Like again, like going back to the original question about institutions, right? Like I don't think we're losing our identity, right? Like I think the institutions are validating it, right? And they're bringing in lots of business for applications. They're bringing in lots of business to the chain, right? And
so that's a reasonable trade-off overall, you
right,
think?
Right. And so like it's good for them and it's good for us. Look, like I think the balance we have right now is like pretty good, right? Like I'm not opposed to playing with it, right? Like I think now that a lot of the institutions are coming and we've like validated that adoption, like maybe we could increase inflation a bit, right? But I would caution us from decreasing inflation too much, right? Like I think
comparing 228 then and 441, like between the two of them, do you have any strong feelings as to what the compromise has been, the reduction there has been?
I thought 228 was brilliant. I thought it was market general.
I think many people did.
And I feel like 441 is just kind of an oversimplification.
Condensed,
Yeah, look, when I first saw 228, I was candidly like really supportive. I'm like, oh, this leaky bucket, we're like losing so much money, like all the tokens, the same market cap, and the chart looks so bad just because this inflation. But then like I saw the DATs come in, I saw more and more institutions come in, and that kind of made me rethink, okay, maybe 228 was a little bit extreme, right? So like maybe 441 will be a better balance, right? Now that a lot of these institutions have come in, they have validated, that thesis, right? Look, inflation is like candidly pretty big, right? Like we're talking like billions of dollars a year, right? Like of asset, like is inflated into the network, like every single year, right? And look, at the end of the day, like it is it is a bit detrimental to like the overall system.
Scale of 1 to 10, how likely is it to pass?
That's a good question.
Prediction market for it maybe, but
I'd have to go around to all the institutions that killed it last time, right? I don't know, like maybe I'd buy like 60, 65 that it passes this time, and maybe I'd sell like 70. I think
generally hopeful, generally optimistic.
Yeah.
It's
Look, I think
far more likely to pass than not.
Yeah.
I'm not overly opinionated on this because it is a pretty watered down proposal. It doesn't just get rid of inflation immediately. It just kind of like accelerates
It's just more of the same.
Yeah, like it kind of accelerates the decline of the inflation schedule. Right. I don't think that's inherently bad, and I'm not overly opinionated on it. Like, and it's always something that we can change later, right? So I'm not opposed to experimenting, trying it out. If it's a net good, I think we can keep it around. And if like all the institutions for something, I'm not putting any money into like Solana or the ecosystem anymore, then maybe we can always like increase it later. But look,
I think we're way past that stage of people looking in from the outside and saying, what, there's something fundamentally wrong here. I'm not going to touch that.
Yeah, look, I think I want to interview a lot of these institutions, talk to them, learn more about how they're thinking about the asset, learn more about how they're thinking about the ecosystem, right? Because it's hard for me to make a fully informed decision on this, right? Without hearing their perspectives, right? Because as you guys said, we live in oftentimes highly technical validator world, and like a lot of these smaller validators are like, oh, these institutions are terrible, they're stealing all of our value from no. I mean, like, they're bringing so much capital in Solana. It's great for the app, it's great for the network, and it's great for them too, right? We want to look for win-win scenarios, right, where everyone benefits.
Speaking of win-win scenarios, before we get to Finn's sort of roundup questions, high level, we're here in Abu Dhabi, right, with a bunch of degens, a bunch of builders, a bunch of Solana DeFi OGs, but also $1 trillion asset managers. Did you think a couple of years ago that would be possible? And fast forward to now, how bullish is that really? What do you think of that 24-month period that we've just lived through that has really validated the network stability? We had some extremely technically straining events like the Trump meme coin launch and others. And institutions obviously thought, okay, this chain can handle the launch of anything really. The network is resilient, but the community is also resilient. The builders are clearly committed. What do you think of that process?
Yeah, look, like, we're a highly technical team. We have understood the tech from day one. We've seen its potential from day one, right? So we, from the beginning, absolutely knew that this was possible, and I think that we're really going to surprise ourselves, and we're really going to blow a lot of minds by how much further we can go, right? When FTX blew up, I and a lot of other people on my team, we doubled down, right? We doubled down because we believe in the tech. We know the tech inside out, right? And we've taken a huge role in improving the tech, right? We're pretty active in Solana Core. We've got dozens of bug bounties across FireDancer and Agave. Like, we've been involved in core development from a really, really early stage. We've been able to give our input and continue to help Ons and FireDancer and all the other core teams improve the network. And look, I think the result is, if you guys saw Brennan's talk, 2 years of stability, 2 years of prosperity, right? 2 years of, the problem is, okay, we're ready, let's onboard more people, rather than like, how do we make the chain more stable? We've come a long way. Really, really proud of everyone, especially at Ons and FireDancer, because, look, I think, look at this arena, like, the progress speaks for itself.
100%.
Right. Look, I think we can continue to go a lot further, and I think now that we're starting to prove out the tech, it's time to aggressively onboard more players.
That's a beautiful roundup. I want to close on a great note. 2025 was a tremendous year. What are you most looking forward to in 2026 moving forward?
It's a good question. Look, I think, me being, ex HFT, and I'm a big market structure nerd, right? So, I think prop AMMs are just the beginning. They're definitely not the end, right? So I think across the infrastructure layer with tech like Harmonic, and across the application layer with tech like HumidiFi, we're going to be able to enable and experiment with new kinds of market structures beyond just prop AMMs, right? New kinds of market structures that are even more interesting, more competitive, and more fair to everyone involved, right? I think I'm excited to see spreads get deeper, right? Rather than just tighter, right? Sure, we're tight for retail size swaps. I want to be tied for like, big 8-figure, maybe even way in the future 9-figure swaps, or at least have infrastructure to like OTC on chain for the big institutions that are trying to get in and out of really, really big positions. I think I'm also really excited for Fire Dancer and Agave Ferrari and all the technical work that's being done to speed up the chain. And look, I think as a result of all this amazing technical work that everyone's done across the board, institutional players and more and more big players are going to continue to bring more and more capital on chain. And look, I think I ignore all the noise, any price action, whatever, I don't care. Like FTX, we all doubled down, right? Because at the end of the day, we are proving out a tech. We believe in the tech. We know that it works, right? So now it's just time to get it out there and improve welfare for as many people as we possibly can.
Talking to you, listening to you makes me even more bullish than I was yesterday. I didn't even think it was possible.
I'm ready for these eight-figure clips on DeFi.
Yeah, absolutely.
Ben, thank you so much for joining us. It's been absolutely awesome to have you. We'll let you get out there and get some lunch. But,
Appreciate it. Thanks, guys. We're just getting started.
We're just getting started.